So just while we're getting started, before we begin officially, I wanted to let you guys know that for this panel, we are discussing Bitcoin, whether or not it is tulipmania or a revolution, and we will be voting on this. So thanks to the Soho Forum, started by the wonderful Gene Epstein, we are using their voting apparatus. If you wanted to go to sohovote.com, you can cast your vote as to which side you think that it is. And you have to vote twice. So let me just confirm that I put in the details all correctly. Okay, to the participants, how does this sound for a resolution? Bitcoin is not a revolution, it is another tulipmania. Does that sound good?
Yeah. Hopefully they won't rig the vote this time.
Yeah, this time. Oh, so just a bit of backstory there. Peter Schiff's a little bit sore because he recently participated in the Soho Forum debate in Manhattan, and he did not win the Bitcoin debate.
It was rigged.
So here is a nice...
Like Bitcoin.
We're giving him another chance. Everyone deserves a second chance to adjust their opinions and become better informed and all of that. So this is your chance, Peter.
I don't know. Your mic isn't on?
No, I don't think. Oh, I am. I can't understand a word Naomi's saying. Can you understand? I think it's the accent.
It's a little reverby.
Okay, so I will be closing the voting in a couple of minutes. So if you want to vote, you have to vote now. We've had 12 responses so far. The address, again, is sohovote.com. You have to cast it before or after. It's not actually counted. So the votes are kicked out if you only vote one or the other, just so that you know. So I'll give you a few more minutes to do that. So while we're setting up, let's just go through, we'll introduce ourselves.
Oh, it's one of these votes.
Oh, are they voting already?
You guys can't vote. You're a bit biased. We already
See,
know
I think this is going to be a fairer vote.
What are we voting on?
Is it, though?
I think gold versus Bitcoin, I guess.
Oh, okay.
Is it gold versus... No,
All the articles on the last debate. Peter Schiff loses.
We don't know.
No, the question is Bitcoin a revolutionary technology or another case of tulipmania, which, by the way, never happened. So all the newest scholarship shows that. So.
Okay, so I'm going to go ahead and introduce our participants here. We have Gary Smith, Fletcher Jones Professor of Economics at Pomona College. We have Anthem Blanchard, the co-founder of Anthem Gold. We have Jeffrey Tucker, Editorial Director at the American Institute for Economic Research. And we have Peter Schiff, the CEO of Euro-Pacific Capital. Thank you so much for joining us. This is going to be fantastic. Yeah.
There's terrible feedback. We can barely understand you.
I know. It's really
Is the sound okay for you out there? We all sound normal?
Sounds great for them, but we have no mics here. So I'll try and stay as close as possible.
We'll try to lip read.
Make this an intimate discussion.
Do we have a format in mind?
So the way I want to do it is I'm going to open up, going to let you all introduce yourselves, introduce your perspective. We can go in the seated aura as it's nice and random. This is more of a discussion than an official debate.
How long do we have? 20 minutes for our opening statements?
20 minutes for right. Jeffrey wants 4 hours for his opening statement. Not quite. So you will just have a really quick intro. Give me 30 seconds if you can, and then we'll go on to some more pointed questions. And I'm happy to take audience questions as well if anyone has some. I think that could be fun to play with. So let's start with you. If you want to just give us a background, where you stand on the issue and what your experience.
In 30 seconds?
You're not being timed, so you can fudge it a little.
In 30 seconds, I approach this as a value investor, and it's a Ponzi scheme.
I didn't know.
Yeah, I'm Anthem Blanchard. I'm second generation gold family. I think Bitcoin is the most powerful messaging system we've ever seen, and it's certainly the most secure database that we know.
Yeah, I would agree with all that. Jeffrey Tucker, Editorial Director, American Institute for Economic Research. I didn't believe at one point in my life. I thought it was a hoax, a scam. You can't make money by clicking your keys on a keyboard and like alchemy making it appear out of nowhere. But guess what? The protocol works. It's revolutionary.
Yeah, and so I am Peter Schiff, and I don't believe that Bitcoin will ever succeed or deliver on its promise, rather, of being money. I think it actually is tulipmania, except it doesn't have the actual value of a tulip.
So there you go. I'm going to go ahead and close the voting now, and then I will reopen at the end. We can assess what the audience thinks, where you stand, and whether you changed your mind. So the way the voting system works that the Soho Forum sets up is that whoever has the largest percentage increase. So it's not the number of votes that increases, it's the percentage of people that increase. So that's how we're going to decide, and I'll get back to the voting at the end. So let's start with you, Gary. If you wanted to defend this position, you said in your opening statement very broadly, like, this is a scam, this is a Ponzi scheme. So please defend that.
How much time do I have now?
I will give you 3 minutes.
3 minutes.
Yeah.
I think as a medium of exchange, I remember 1980s, I wrote a money and banking book, and I said the future is electronic money, and that future is here. And I was calculating this morning, I think 99.95% of all my transactions are electronic. And, but some people like cash, okay? And there's out there 12 billion $100 bills in circulation, up from 2 billion 20 years ago. And who's using that money? Well, it's people who don't want the IRS or law enforcement officers to know what they're doing, mainly. And I had a student who was a Bulgarian, and he used to carry around $100 bills in a briefcase and a gun in his pocket. And that Bitcoin's a lot better than that. If you want transactions that are not witnessed by anyone and there's no notice taken. Although I think anonymity, there's a scale, right? Now, my perspective, though, is as an investment. As an investment, there's investors and there's speculators. Investors buy an asset because it generates cash flow. A stock, you got earnings and dividends. Apartment building, you got apartments to rent. A business, you got profits. Bitcoin, you have, well, it's a speculation. A speculative thing is you buy it not because it yields any cash, but because you think you can sell it to an even bigger fool than yourself. And as long as the price is going up, the bubble keeps going. But when the price stops going up, there's no reason to buy it anymore as an investment. Now, maybe for illegal activities there's a reason, but as an investment, there's no longer a reason to buy it. And it's not the case with real investments. With Apple stock, if the price goes down, you want to buy more. With Bitcoin, the price goes down, and you get really nervous that the bubble's about to pop.
You still have extra time if you...
Oh, great. I could talk forever on this.
You've got a minute and 15 seconds left.
Okay. So the thing about bubbles, you go back to the, we've all been through them. We haven't been through them, we know about them. The tulip bulb scandal, the South Seas bubble, the dot-com bubble. And now, years from now, we're going to look back at the Bitcoin bubble, okay? And I'm not saying you can't make money trading Bitcoin, you can. Just like some people made money trading tulip bulbs, some people made money trading South Sea stocks, some people made money trading dot-com stocks. But on average, since there's no cash flow, on average, the average investor in any of those things is going to lose money. Now, it doesn't mean it's not fun, it's not exhilarating, there's not people who make profits. I mean, we're here in Las Vegas, right? People love to gamble, they love to make money, they regret when they lose money, and the average gambler loses money. And it's the same with Bitcoin. The average gambler is going to lose money in Bitcoin.
Okay, Anthem, did you want to present the opposing side?
I would love to. So just for the record, I think year over year, I look Bitcoin's up about 170% on a 12-month basis. So just to put things in perspective. Also to put things in perspective, let's remember what Bitcoin is. Bitcoin is software. It's a special kind of software because it invented a new technology in software, and that is uniqueness. See, before Bitcoin, it was impossible to have a unique digital asset. That's why the most security-oriented organization in the world is admitted to getting hacked. It has integrity. The US Pentagon, the military, the US, they've been hacked. Now, you would think the US military would have the best security software in the world, and you're right. And that just goes to prove that security software was not really secure. In fact, no software was secure. Bitcoin enabled software to be secure by having a unique digital asset, something you couldn't replicate. If we go back in history, we see that the predominant forms of medium of exchange all had to do with messaging and communication. And we know gold goes back at least 3,000 years, Lydia, Western Turkey now. It was revered by the Egyptians, but not used as money. We've seen it in pellet form hundreds of thousands of years ago, and we've also seen clay ledger tablets, tokens, tens of thousands of years old, hundreds of thousands of years old. So these concepts are very old. And just looking at the facts, gold is incredibly liquid, 200 billion a day. Bitcoin's very new, so it's not very liquid, but it is scarce. And it does something very, very important that we've also never been able to achieve before. And it enables machines to custody rule sets because there's no central authority. There is no Bitcoin company. There is no trust or some kind of central organization. There are groups that are recognized by the broader community to be the best developers of software, and usually their software gets adopted eventually. But there's very strong economic game theory, and it allows humans to no longer have to custody trust. I mean, the irony here, we're talking about Bitcoin going up and down in fiat currency, and really currency that government dictates as value. And gold has been the anchor for the past 3,000 years of this forced marketplace, this government system. Bitcoin represents the first open, voluntary marketplace. There's no force when you exit, you just sell the token. That's your vote. That provides you access to the software, entries into this database. See, a Bitcoin is like talking about a ton of gold, whereas 1/100 millionth of a Bitcoin, the smallest unit, is kind of like talking about a grain. What is the easiest, most malleable form of gold? About a grain, maybe a gram, arguably. And in Bitcoin, it's a Satoshi.
Got 5 seconds.
That's one entry into the most secure database in the world, and it's by orders of magnitude that's never been seen before. That's why Bitcoin and small Bitcoin B has value.
Right. Now let's go across to Peter now. Peter, you have 3 minutes to present your case.
Yeah, you know, the acoustics here are pretty bad. It's really hard to understand
really hard.
what Anthem said, but if he was talking in favor of Bitcoin, it was probably a bunch of nonsense anyway. So it doesn't really matter. So I'll just talk to you about why I don't think it's going to work. First of all, you know, in order to be money, and ultimately that's what Bitcoin has to be. That is the promise, digital currency, that it's going to be money someday. Well, in order to be money, you have to satisfy 4 basic criteria. You got to be a medium of exchange and a unit of account. That's the easy part. And yeah, I suppose I can give Bitcoin that, although it's not a very good medium of exchange unless the person you're exchanging it with wants to keep the Bitcoin. If you actually want to get in and out of other currencies, the transaction costs can go way up. But let's skip that part. Let's go to the other 2 parts where Bitcoin can never succeed and therefore can never deliver on its promise. Money needs to be a store of value. Bitcoin can never be a store of value because it has no value to store. Bitcoin is only worth what somebody is willing to pay for it. And nobody knows what somebody is going to be willing to pay for a Bitcoin tomorrow, next week, let alone next year, in 5 years, in 10 years. Sure, the price of Bitcoin could be a lot higher, but it could also be 0. And nobody knows where it's going to fall for sure. So you don't have any kind of certainty of a store of value, which gets to the 4th aspect that is required for money, is it needs to be a medium of deferred payment. You have to be able to make a contract that calls for payments over time, installments. You have to be able to borrow and lend. Let me borrow 100 Bitcoins and I'll pay you back in 5 years 100 Bitcoins, and there's a rate of interest. There is no way to negotiate loans in something that's value is so highly speculative from day to day, let alone week to week, year to year. So Bitcoin is not going to be money. And if it's not money, what is it? It's just a digital token. And people are speculating that one day it may function as money, but it's not functioning as money now, and there's no proof that it will ever be function. You have to function as money. You have to take this gigantic leap of faith that at some point in the future, everybody is going to own Bitcoin, and nobody is going to want to sell. Nobody is going to want to convert their Bitcoins into another currency, and somehow it's all going to stabilize, and all the volatility is going to magically go away, and there's going to be some reliable store of value. It will never happen. I mean, the people who are promoting Bitcoin try to say, well, it's digital gold. It's not digital anything. It's, if anything, it's digital fool's gold, because what Bitcoin was meant to do is to pretend to be gold. If you look at the way Bitcoin is portrayed in the media, you know, it's a gold coin with a B on it, and you mine it, even though there's no mining involved. It's just a math problem. There isn't any real scarcity like gold. It's just that artificially imposed scarcity. But the most important difference is that gold actually has real value. There are things that you can do with gold. There is nothing that you can do with Bitcoin except sell it to somebody else until the somebody else doesn't want to buy it anymore. And then there's absolutely nothing you can do with it.
Okay. And Jeffrey Tucker, last but not least, you have 3 minutes to defend your position in favor of Bitcoin. It is a revolution, not tulipmania.
Sure. Part of me is startled we're having this debate still now, 8 years later. It would be one thing if Bitcoin were valued at 1/16th of a penny, as it was on October 5th, 2009, which is the first posted price of Bitcoin, or maybe when it was $1, people might say, oh, there's no way that this crazy new digital magic internet money is worth the same as the world's most valuable currency. Maybe when it was $2, a lot of people sold at that point because they thought it could never get any higher than that. But folks, come on. I started writing about Bitcoin when it was $30 and people were screaming, bubble, bubble, bubble. I predicted the $1,000 price and yeah, it fell to 300. Guess what? It's still an experiment. We're still in the early stages. Not all technology is born with perfect valuations, but this idea that Peter is trying to push on you that Bitcoin is uniquely speculative because its value only extends from the mind of human actors. I hope you understand that that is true of every single existing thing in the entire global marketplace. There's not a single price in existence that isn't a reflection of the valuations we impose on it from our minds. There's no price in existence that isn't a speculative price. The price of Bitcoin is no different from the price of that puppy or Pepsi or anything else. I mean, that's what economics is for, is to discover value and to allocate resources. So what Peter doesn't get, and I've been trying to explain to him now for 8 years, is that the basis for Bitcoin's value is the service it provides. What is that service? That service is the payment system that's embedded within the money itself. Again, if you don't understand what Bitcoin has done, and by the way, everything I'm saying applies not just to Bitcoin, but Bitcoin Cash and Dash and Monero and 2,000 other digital assets as well. So what the innovation here is that it takes these traditional properties of money, the facilitating trade through a unit of account, a store of value, and yes, it is a store of value, and adds a third one, namely a settlement mechanism that allows for a cash-like exchange regardless of geographic proximity. That is the magic. That's the peer-to-peer aspect of Bitcoin. That is an immense, unspeakable innovation. No monetary theorist in the history of the world ever knew or understood that there could be this kind of innovation in money, that it could have built within it its own payment structure.
Yeah,
that is the blockchain technology. It took 10 months from the release of the Genesis block until the first valuation of Bitcoin for that use value of Bitcoin to be revealed to itself enough for it to obtain its first posted price. At that moment, it was the hinge of history. We learned something new. Most of us have learned something new.
Okay. So now I'm going to allow some time to rebut from each of our presenters here before we go on to questions. So let's reverse the order. Let's start with you, Peter, then we'll go Anthem, Jeffrey, Gary.
Fortunately,
I
could hear what Jeff said because he's sitting right next to me.
And I've said it to you 1,000 times.
So first of all, the fact that Bitcoin's price has gone from pennies to $20,000 is irrelevant to the topic of whether or not it's a bubble. Because, of course, by definition, we wouldn't even be talking about it being a bubble if the price had not gone up. And the fact that people believe that it's going to work doesn't mean that it will. And in fact, it still is not functioning as money. What it's functioning as is a speculative asset. People are buying it because they expect that it will continue to go up. Now, obviously, it's dropped 70% from its highs. It's now around 6,000. And so, but there are still people who think it's going higher. But at some point, people are going to be more worried that it's going to keep going down, and then they're not going to want to own it anymore. When Jeff says that Bitcoin is just like any other asset, like that puppy. The difference is you can pet the puppy, you can enjoy the puppy can play with you. There's going to be some value that we're going to ascribe as human beings to having a canine companion. And we can compare the value of a puppy to the value of other commodities that also give us some type of value in that they give us pleasure. There's things that we could do with them. There's things that we can use them for. There is absolutely nothing you can do with Bitcoin. The only value is that you think you're going to get rich. It is a means to an end. People who are buying Bitcoin are buying it because they think they can sell it and make a profit. That is the whole mania. You know, get in and get your Lambo. They keep showing all the people that got in, all the kids that bought, and they put their bar mitzvah money in, and now they're millionaires. And yes, you can be a millionaire too. All you got to do is put your money in Bitcoin and you're going to get rich. And that is the allure. That is what's going on. But all that is going to change when the market starts to collapse. You have to have an actual use. Money as a commodity had value before it became money. There was something about it. Gold became money because the gold itself was a highly sought after, valuable, useful commodity before it became money. Money is simply the most liquid commodity because you have to have value to relate it to other goods and services, other commodities that you are exchanging it for. There is no way to relate Bitcoin to anything. It's only existed for 9 years. Nobody can say what anything is worth. How many Bitcoins is a puppy worth? Nobody knows, and nobody will ever know. Right now, it's simply about going up. And when the price goes down to 1,000, 100, the bubble pops, the air is out of it. Nobody is going to be talking about how successful it is. I hope, Jeff, that I know you got in. I wish I had listened to you and bought a bunch of Bitcoin, but hopefully you've sold enough Bitcoin so when the bubble pops, you're not left holding a bag, because there's going to be a lot of bag holders. Like all Ponzi scheme or bubbles, the profits of the people that got in early are going to equal the losses of all the latecomers who have been buying in over the last year or two.
If I can...
All right, Anthem, you are going next if you have something to rebut.
I think so, because I think even to add to what Jeffrey said about a payment mechanism, sure, that's true about all these different crypto tokens out there. What makes Bitcoin special is its security function. The reason people hold Bitcoin, and it's over $100 billion market cap, is because of its security function. That's the reason people hold Bitcoin. It's the security layer. And actually, that application happened before price was ascribed to it, as Jeffrey mentioned, because Bitcoin first started January 3rd, 2009, clearing. And so before price was even ascribed to it, the security layer was created. It created this decentralized security layer that all of us technologists who are known to build things and ship product out are really excited about this new layer, because it allows us to have a digital playground that we can build on. Just like this casino, we're sitting on layers right now. The most expensive part of this casino by far is the foundation. It probably cost about 2/3 of the entire cost of building this building. Bitcoin's very, very similar. It's the foundation. Like, we're all used to using applications. Did you all know that when you're using the application on your phone, you're using the 7th layer of the internet? It's called OSI layer if you want to Google it right now. So we're using the application layer. That's all we ever know. Bitcoin secured the application layer, so there's no longer 7 layers. We don't know how many layers there are now. So Bitcoin is the foundation of these new public blockchain software suites. And all of these public software suites are going to rely or do rely or will rely on Bitcoin as the security layer. So where Bitcoin differs from Bitcoin Cash or Dash or Monero is its security layer. And that goes down to when you're looking and doing diligence on different public blockchain companies, really any company. The founder, CEO, executive should be able to say in 2 sentences or less, what is the purpose of what they're doing? What is the utility of what they're doing if it's software, and what is the use of the token if it's a public blockchain project? Because that token should be a software access key. Just like those of you who are old enough to remember in the 90s typing in that 16-digit alphanumeric code that Microsoft Windows had, software access key. They're still around today. We don't see them because everything is licensed through centralized cloud authorities. They're Amazon, Microsoft, Google, what have you, Dropbox. It doesn't matter. The way that these public blockchain software suites work is that the software access keys that people call tokens are distributed. And like a Nickelodeon requires a nickel, these public blockchain softwares require the token if they're really valid and they're not promoters and they're true public blockchain software.
Great. Gary?
I'd like to push on one thing, the idea of international medium of exchange. So I publish books, Oxford University Press. They pay me through the banking system, electronic money.
Yeah.
I do consulting abroad. They pay me through the banking system. Why should I want to be paid through Bitcoin instead of through the banking system?
Well, it's faster and cheaper.
Faster than a credit card?
Oh, yeah, sure. It's an instant settlement layer. And
My payment from Oxford University Press is instant.
Oh, it's not instant. No, there's
Not if
lots.
you want to turn
no,
it
there's
into cash.
Yeah, there's lots.
Well, I
of
don't convert it to cash.
No, but wait,
I use it to buy Apple stock.
there's always counterparty risk with these financial intermediaries.
So you think the banking system will collapse? That's your.
No, I would say it's not settled. When you think you're getting your money, that is not a settled transaction. It takes what, 3, 4, 5 days, 2 weeks? That's just true. I mean,
So it's the speed.
Sir, look.
And the 3% cost or the 10% cost.
It's the difference between a trust-based system that has counterparty risk embedded in it because you haven't used intermediaries, and a peer-to-peer exchange system where there's instant, immediate, almost free settlement. Where the transaction is finally settled. You know, look, I have a friend of mine who had to explain this to Janet Yellen, by the way. She was completely blown away when she witnessed her first Bitcoin. She said, oh wait, what bank did you use? We didn't use a bank. What intermediary made this possible? Didn't use one. What company? There's no company. She couldn't believe it. And I understand you're incredulous. You're incredulous.
No,
Heck,
look, to say there's
an
no
old
trust,
hands. You know, I get it. I get it.
Jeff, to say there's no trust in Bitcoin, it's the ultimate trust. You have to trust that this digital nothing is actually going to be worth something. You know, Anthem says that the beauty of it is there's security. What the hell are you securing? There's nothing there. I mean, there is no limit to the number of cryptocurrencies that people can come up with. You can come up with them every day. They can launch a new one that can be better, faster, and cheaper
it's called a
than
market.
Bitcoin.
It's a market.
But so then what makes Bitcoin special? Nothing. All that happens is that it was the first one. Well, so what? When is there ever a technology where the first one is the best? Where the first one never gets improved on by somebody better. But the fact that you can always make something better means that you can never accept the first one.
TCP/IP is one. For all of us to use the internet, we use TCP/IP. For all of us to use email, SMTP. Never been improved upon. So
we don't know.
that's a reality.
20 years.
And the reason the Bitcoin has value, again, is as a security layer that you can build on. It's software. It's all software. People are ascribing value to software because it's a security layer. More kilowatts.
But you don't own any of that
Bitcoin
software when you own a Bitcoin.
Yes, you own.
It's like telling me I own the roads because I have a car.
So this was Gary's rebuttal time that we used.
Well, you know, I got $50 worth of crypto I got last week as a gift.
And it's in your pocket?
Do I have to
It's in
stand
my cell
between you
phone,
two?
yeah.
Because I will. So this was actually Gary's rebuttal time. If you guys are happy to just move on, or Jeffrey, if you wanted to use your rebuttal time.
You're avoiding the main appeal of Bitcoin that I see, which is the anonymity.
With the what?
The anonymity.
Yeah,
People do not want the government knowing what they're doing. And you're not saying that.
Yeah, let's be clear.
Use words
It
like
is not
security
anonymous. It's not anonymous.
Yeah, they can track you on Bitcoin. They have better cryptocurrencies that are more anonymous.
People think they're anonymous.
The purpose of the trustless layer is so you don't have to go into a bank and beg the banker and cough up all your credit history and your status and your income.
But then if you want to turn your Bitcoin into dollars or euros or yen, you got to deal with the banking system to do that.
Yeah, that
and now
sucks.
you're right back in it.
So Jeffrey, if you wanted to use this time to
You can't stay. But what if you want to go out of the crypto ecosystem? How many businesses can you spend cryptos directly? None. Nobody's taking crypto.
That's false.
No.
You want to use your rebuttal time?
We take
or
it.
you have to move your rebuttal time? You had 3 minutes of rebuttal time that kind of got smushed there. Do you want to use it to rebut any of the points that previously made?
Yeah, tired of rebutting everybody. Let me just add to your point about why Bitcoin seems to be uniquely valuable among the thousands of cryptos. Yeah, I think there's a network aspect to it. I'm not sure I'm persuaded by your security point, but There is a network aspect, was the first one out there, but the important thing is that day to day in crypto exchanges, Bitcoin still works as the trading pair for all the other currencies. That's why you see the market, seem to always track the Bitcoin price. That will not always be true. I mean, that could change. And I'm not even here, Peter, to argue that Bitcoin Core is the great currency for all time. I mean, it could be displaced by some other financial innovation. I remember worrying in 2014 that the core developers were just a little too conservative, and that they felt like, oh my God, this thing works, let's never change it again. There was this, you could feel it in the air. And since that time, we have seen a lot of innovations. You look at the Ethereum platform with the scripting language for smart contracting. That was supposed to be part of Bitcoin, but people got too conservative about it. You look at some of the innovations in Dash, especially with the governance structure. It's really fascinating. Or Monero, which is an anonymous coin because it's spending all the public keys in a wash cycle. So there's a lot of very interesting innovation that Bitcoin Core itself has not embraced, just because it's such a conservative kind of tool. That may doom it eventually. I don't know.
It's the security layer again, and the miners are very antagonistic because they've got economic game theory. They want to maximize their profits, and until the miners see applications built on top of Bitcoin being used, there's no reason for them to lower the transaction fees. So if you Google Bitcoin energy consumption, you'll see that of the 230 marketplaces in the world, and Bitcoin's really the only one powerful enough to be in that number, the rest of them are governments, Bitcoin ranks 41 now. It's more powerful in the country of Switzerland, Ireland, Algeria, Israel. Literally, there's more power that goes into protecting, clearing, securing all the messages on this transaction from being reversed.
What a waste of resources.
Yeah, I know. Just like a notary is a real waste of resources, and every single Shakespeare play practically is a notary public at the end of the
and protecting nothing.
And so is the banking system wasting resources by creating a lot of nothing.
Before we do it back and
militaries.
No, I don't.
At the end
it's
of the
so hard
day,
for you guys to hear anything.
it's a notary public
I'm going to stand in between.
into.
Okay,
That's what Bitcoin is.
Let's shut this down for a second.
Simple.
And I'm just going to stand here. So we don't do like a back and forth, let's go to some questions. And rather than interjecting, we can take it one at a time and you all have a chance at answering the questions. Let us go to the first one.
Hi, I'd like to separate the discussion of Bitcoin from the blockchain, because I see a lot of potential for the blockchain, and I know that even the Fed is looking at that as a competitor to FedWire. But Bitcoin itself, if I lose it somehow, like there was a Japanese scandal where the computers disappeared, who am I going to go complain to?
That's an interesting issue, who you're going to go to complain to. There are governance structures being experimented with now in the crypto space that do create a kind of a layer of accountability. A phone number you can call, and that's fine. Not everybody wants that. We'll find out. The beautiful thing about crypto is it's actually opening a market for all these kinds of issues. What was the first point? Yeah, let me just be clear about. Oh, yeah. Look, if you could drive a wedge between blockchain and Bitcoin value would fall to zero. Those are bound up with each other. You can't separate them. It's like let me just a third point. No, Peter, really. Just so everyone in the room understands, if you have your passphrase written down somewhere, you can lose your phone, your computer can blow up, you can find yourself shipwrecked on a desert island, whatever. You can never lose your Bitcoin if you can recreate your private key. Yeah. So if anybody's experimenting with this, and Peter, I'm sorry I didn't warn you about this because you are now a first-time owner of crypto, therefore a noob, but what you have to do is write down your private key somewhere and keep it in a safe place.
Yeah, and then you may not lose your Bitcoins, but they may not have any value when you find them. But let me answer your question about blockchain. Sure, Bitcoin utilizes this blockchain technology. Now, any business can decide to incorporate a blockchain technology into their business. I mean, anybody, maybe, airlines maybe can decide, well, we're going to give out our frequent flyer mileage using a blockchain, and we're just going to issue tokens for, anybody can find ways potentially. So I have no idea. Maybe blockchain technology will end up being a big thing. Maybe other industries will incorporate it. Maybe governments will incorporate it. I have no idea. But Bitcoin is not blockchain. It's just something that happens to utilize the blockchain. So the blockchain can succeed and Bitcoin can go to zero. It doesn't matter. The two are not separate, are not connected. It's not like if blockchain is good, then that automatically means that Bitcoin's value is going to keep rising just because it was the first thing to utilize a blockchain. But because you can find all sorts of ways to have real value tied to a blockchain. When you have Bitcoin, you just have nothing that's using the blockchain.
Anyone else have an answer?
I didn't realize Peter was quite the technologist over here. I'm impressed. Wow.
Question over here.
Oh, by the way, government cryptos are a hoax, like universally. Like this Venezuela Petro, that's not really a cryptocurrency. That's just a debt instrument that's called a crypto based on oil. And if governments want to reform their monetary systems, I would suggest forget about crypto and blockchain. Give us a gold standard for God's sake. If that's what,
I agree.
Yeah.
I agree.
But leave crypto alone. That's all we need. We're begging you, leave us alone. That's all we want.
Yeah.
All right, question over
Free to
here.
lose money.
I see one fundamental point being missed in this debate is discussion about the difference between currency and money. So, I personally see like Bitcoin can possibly be a very good currency, but I can't possibly see how it can be good money. What gold, as a store of value.
Yeah.
I cannot imagine somebody storing their life's work, labor, and storing in a math formula, and storing that as guarding that, as opposed to gold, which is, again, you have to spend an incredible amount of energy into mining the gold, but there is something for thousands of years that it has proven the value of time that gold does provide a store of value, and I cannot imagine any cryptographical mathematical formula. This is a debate between physics versus math.
Yeah.
And physics will always override any
You're
abstract math.
absolutely right. The distinction between money and currency is currency, if it's legitimate, is backed by real money. It is convertible. Original paper currency was an IOU for gold. So it's circulated in addition to real money, but it was simply
So you're saying a currency is a money substitute always?
But then there's also something called fiat currency, which is currency that's backed by nothing, that has absolutely nothing behind it except the legal tender laws of the country. But what Bitcoin has more in common with is the fiat currencies that are issued by governments than legitimate currencies that were issued by governments and banks that were actually backed by money. But the difference is the digital fiat currency is not legal tender, has no history of use, is not used to pay taxes. There is some validity to these fiat currencies, even though they depreciate over time, and some of them may eventually go to zero. They do have more going for them than the crypto fiat currencies.
I would just add in the point, Peter, this was brought up before, the definition of fiat, we need to be careful with that. The definition of fiat is money by decree, not money that's not backed by things. So we may want to get on the same page with our definitions.
Well, it's irredeemable currency, so its value comes just from faith. It doesn't come from something tangible like legitimate currency.
Okay, let's go to our next question over here.
The D Hotel on Fremont Street here in Las Vegas accepts Bitcoin. So the claim that no one accepts it is false.
Well, they probably accept BitPay. They use a company that will help you exchange your Bitcoin for dollars. I do the same thing at my gold company. We allow people to convert their Bitcoin to dollars, but we only accept the dollars. And I'm sure the same thing is going on with the hotel. They're making it easy for people who have Bitcoin to sell their Bitcoin to get the dollars they need to pay the hotel.
Yeah, because their expenses are in dollars predominantly. You have to match expenses when you're operating a company.
Do you have a question?
Yeah, Mr. Schiff says that there's no use of Bitcoin, but one use is that it can cross borders without confronting government patrols.
Remittances.
Yeah.
And what's your question? What are their thoughts on that? Or?
Yeah, that's my comments on that.
As long as you don't leave the ecosystem, and unless the government really cracks down on it.
Right. I might take all moderators' prerogative and just ask a question, because we've talked a lot in this debate, or this discussion, whatever you want to call it, about this value. Like, what value does Bitcoin have at the end of the day? And you mentioned the gorgeous little puppy sitting in the 5th row over there that, it doesn't have the value, like you can't pat it like a puppy. So what would you say to the people who would argue that Bitcoin revolutionized tech because it created the first ability to have a digital asset that can't be reproduced? That's the intrinsic value. That's the value of Bitcoin, that it's digital. It's something that cannot be reproduced, but it's a digital asset. So would you say
Naomi,
that
was the point that actually began to open my eyes to what was going on here with Bitcoin. For a long time, I rejected it. From 2010 all the way to 2012, I think you were in the space earlier than I was, right? But I was rejecting on grounds that I didn't understand that exact point. I thought, well, the whole point of the internet and digital assets and things like that is their reproducibility. That basically they have the ability to be, you can make them again and again and infinitely. That's not a good idea to do that with money, actually, because then all you're doing is recreating the dollar. So we had to have scarcity as part of a digital money. And I think it wasn't until late 2012 that I finally wrapped my brain around the fact that the protocol had solved the problem. And Peter calls it artificial scarcity. Yeah. I mean, what we did is we gamed the system with the protocol to make the digital world behave like the physical world. And that's amazing. And by doing so, we created the ability to transfer value peer-to-peer on a decentralized network anywhere in the world, virtually for free and instantaneously with final settlement. And that is amazing.
Yeah, but the problem, Jeff, though, is you've spun off Bitcoin Cash, Bitcoin Gold.
Why is that a problem? It's called choice.
But because there's an unlimited number of new cryptocurrencies that can flood the market. Inflation in cryptocurrencies is massive, and then you have all these other cryptocurrencies that continue to be created and add to the supply, and eventually there's not going to be enough demand to support the price.
So when you go to CVS, do you complain about the number of brands of toothpaste that are there?
No, because toothpaste can actually clean my teeth.
Oh.
And and believe me, there's not 2,000 of them, and people aren't buying
400.
toothpaste
I don't
to get
understand
rich.
why there's 400
People don't
toothpaste.
think people aren't hoarding their toothpaste because they think the price is going to go up and someone else is going to pay them more money for it. The supply of cryptocurrencies is going to continue to expand until it overwhelms the demand, and then the price plunges. And Naomi wants to say that there's some type of value to Bitcoin. What is it? How can you quantify whatever Bitcoin has created? What it's actually worth, nobody knows. Maybe they're worth $1 a coin. Maybe they're worth $100 a coin. I don't know. Maybe they're not worth zero. We'll find out one
Anthem
day.
is right. Anthem is right. The fundamental value of Bitcoin traces to its technology as a tool of documenting.
But it doesn't have a
ownership
patent
rights.
on that technology. Anybody can replicate it.
Yeah, but it has by far the most hashing power that goes into protecting it, by far more than Ethereum.
Well, that can change.
No, it'd be really, really difficult game theory-wise for something else to surpass all of the country of Switzerland or Ireland or Israel. It's like thousands, tens of thousands times stronger than Ethereum at this point.
Stronger.
The very first entry, hold on. The very first entry in Bitcoin had a print of the Bank of England bailing out all of the English banks. Satoshi Nakamoto used Bitcoin as a notary for his very first transaction. So is a notary important to you? Do you think it's important when in your business that you talk with the person next to you and you know what they're saying is real? Because you don't right now. There is no data integrity right now, period. There's no way in the world to prove that what one person is saying to another unless they tie into Bitcoin. Because it's the only database that we've known that hasn't been broken, that has massive amounts of kilowatt hashing power.
It's been around for all of 9 years. Oh my
hashing
God,
power.
it hasn't been cracked in 9 whole years.
Yeah, well, the Pentagon and RSA and Microsoft and Deloitte and Equifax and Target and Saks Fifth Avenue, and those are the ones that actually have admitted to it, that are smart enough and moral enough to admit it. Because guess what? Everyone has been hacked. Everyone has been hacked. All you have to do is go onto the dark web. I was just attending a ultra high net worth Rockefeller Center, Deloitte. The highest net worth people you can imagine, their family offices, and the CTO of JP Morgan is telling all of the crowd how to secure their phones and that it isn't secure and you have to use new emails, and even then it's not secure because everyone really knows that software is not secure, that's in the know. Everyone knows, and Bitcoin is secure. That's why it's valuable.
So as it was my question, I am a bit confused as to why we're conflating all these different cryptocurrencies. Like, because the Bolivar has hyperinflation, that doesn't affect the US dollar. It doesn't make that worthless or every other government currency out there. So I'm not sure I understand that point, but I know Gary does want to say something.
On Peter here, but he's been making the same point for years, as
Because
if,
the point
you
is
don't
pure
understand that every crypto lives on a different blockchain ecosystem. There's not going to be somehow a weird mix-up between Litecoin and Monero.
No, it doesn't about a
and
mix-up.
Cardano
It just
and
means that there's more
different
cryptos
products
out there that you can choose from, and there can always be one that becomes better. And then if one becomes better, then it makes the other ones obsolete. To say that, oh, this coin is going to have value when somebody else can invent one that is better, faster, cheaper, more secure than Bitcoin, because technology is always improved on. People learn from the past and then they make it better. And so there's no guarantee when you own Bitcoin that 10 years from now, 20 years from now, anybody is going to want a Bitcoin for anything. Right? It can
Peter, I do want to allow Gary a chance. He's been trying to get something in, so go ahead.
I just wanted to make a terminology point here. If you're thinking about investing in Bitcoins, intrinsic value, fundamental value is specifically what you would pay to buy something and hold it forever. Stock has intrinsic value, apartment buildings have intrinsic value, businesses have intrinsic value, Bitcoins have no intrinsic value. Nobody would pay a penny to simply hold it forever.
We have time for a really quick question if we're fast, so go ahead.
Nothing has intrinsic value.
Yes, just as an average Joe, okay, just as an average Joe, when I go down to the grocery store tonight, I'm going to use this stuff, and even though, over the long term, it's not based on anything, over the long term, there's inflation, but in the short term, it sure seems like this stuff, the value of this stuff, if I want to just go buy some groceries or whatever, is a lot less volatile than Bitcoin, and it's a lot less volatile even than gold. And I wish somebody would explain this to me. We say these are going to be great currencies, but in the short term, when I go down to the store, I've got a lot better idea that what this is going to buy than either gold or Bitcoin. Please explain this to me.
It's called Gresham's Law, real briefly. It's that people spend bad money and they hoard the good. It's kind of like a version of Sucker's game, but in slow motion.
I think it's actually
just
quite
avoided
different.
the question. Gresham's Law has got nothing to do with
it
Bitcoin
does.
volatility.
It does. Gresham's Law is the same reason people don't spend their gold. So if you were listening, the person
What it has to
asked
do
why
with-
they don't spend their gold, why don't they don't spend their Bitcoin.
He said it's got too much volatility. And look,
ask
but
the
people
gentleman
want to be
again.
paid in
Yeah,
gold.
I talked about gold,
Right?
Peter. You
People would
weren't
want to be
listening.
paid in gold.
But
They
you
wouldn't want to be
understand-
All right, let's let Gary, you want to say something?
What it has to do with is it's the unit of account. Everybody quotes prices in dollars, and so it's very hard for dollars to jump up or down randomly the way Bitcoin jumps, because Bitcoin is just one thing that's tied to nothing. A dollar is tied to the price of a puppy, the price of a Coke, the price of a hot dog, the price of hamburgers. You can jump the price of hamburgers, you can jump the price of hot dogs. It's really hard to jump the price of everything simultaneously.
Well, also dollars is $1 quadrillion when you talk about interest rate swaps, of U.S. interest rate swaps. I mean, gold is in tens of trillions. So the bigger the size of a pool of something market capitalization-wise, the less volatile it typically tends to be.
Well, that's one of the reasons.
Until you get to the very end of fiat, and then it goes all the way down.
Now,
Well,
when the sole basis of the asset is sheer speculation, there's going to be a lot of volatility. When you have nothing else that you can do with it other than trade it, it's going to have volatile because there's no actual real user for a Bitcoin that creates a real market. It's purely speculators, and the market is really controlled. I mean, you have a small number of people that have
You
the
have 10
lion's share of
seconds
the
as we're running
Bitcoins.
out of time.
And so the float, relative to that is smaller, and so you're going to have wild swings in the price. And the people who promote Bitcoin they pretend that at some point in the future, all that volatility is going to magically disappear. But there's no reason to believe that would happen. In fact, I think the volatility
Peter, I've
is
got to
going
cut you
get
off.
bigger.
So we're going to go into closing statements. You have 30 seconds each just to round out your point. We're going to go in the order that we started with. And during that time, if you go to sohovote.com and cast your vote as to whether or not your mind was changed. So head to that website. I'm going to open the voting now, and we will start the voting in 1 second. Okay, so the voting is now open. Sohovote.com is the website if you head there. And let's begin. Gary, 30-second closing statement.
Well, there's three ideas been floating around. One is blockchain technology. One is Bitcoin as a medium of exchange, and one is Bitcoin as an investment. And my focus, of course, has been on Bitcoin as an investment. And as I say, there is nothing there. Okay, there is absolutely no intrinsic value to Bitcoin.
All right, Anthem.
Well, I think as an investment, if you're looking at it as an investment, do you want to hold something that billions of people already hold, like dollars? You want to hold something tens of millions of people hold? You want volatility ultimately when you're in a market. You can gain off of volatility. So Bitcoin is the most secure database in the world. It's orders of magnitude, hundreds of times greater security than the next most secure blockchain. You're buying a part of the future. You're buying a part of your kids, your grandkids' future. So, think about having some Bitcoin along with your gold and your other assets.
We're out of time. Peter, closing statement.
Yeah, Bitcoin was a great speculation years and years ago if you bought in when Jeff or Anthem did. But if you buy in now, you're simply enabling the people who got in early to cash in. I think the bubble is likely peaked and we're just going lower. And I feel badly that so many libertarians, this is Freedom Fest, you got a lot of libertarians that kind of got sucked into the hype and the mania and the idea of Bitcoin and how it was going to take down the central banks. But the irony of it is, I think that Bitcoin's failure and the collapse of all the cryptocurrencies is actually going to succeed in making government fiat currency look good, which is not a good thing. And I think the government is going to. The government's going to blame the free market for this failure, and it's going to lead to more regulation.
I can never interrupt Peter. Okay. Men and women of Freedom Fest, you've dreamed about sound money. So have many of the people who come before you for generations, even thousands of years. What we've learned over 6,000 years is you can't trust government to manage the money. You can't do it. But here's the problem. How are we going to reform the monetary system? We've begged the central bank to give us a gold standard, but guess what? They don't want to give it to us. What we needed was what Hayek dreamed of: choice in currency, outside the banking system, outside of government.
Out of time.
In our time, we've been given that beautiful technology. Is it perfect? No. Is it ready? No. Is it finished its price discovery? No.
Final
but
word,
it's
Jeffrey.
here. It's beautiful. Embrace it. Love it. Celebrate.
Wonderful. So I'm
There's
closing
two of
the
those
voting
puppies.
now.
It's inflation.
Okay, all right.
3.
We'll blame the puppies.
They're
Closing
multiplying.
the voting now.
They're like
The
Bitcoin.
results
Tulipmania.
Except they're cute.
They're
cuddly.
They have no
Alright.
intrinsic value.
So the results are
They're just
the
animals
yes vote.
on leashes.
All right, just a second. The yes vote before, we had 33% of people said yes, Bitcoin is not a revolution, it is another tulip mania. So, and then that changed to 41%, so there was a change of 7% increase. So that is the target to meet. Then no, it is not. They started with 51%, and they ended at 51%. So there was zero change in those minds. So the winners of this debate are the affirmative that Bitcoin is not a revolution, it's another tulip mania. However, as a disclaimer, I would say if you want to learn more about Bitcoin and why it is actually a revolution and why the smartest people in the group
No, I think
agree.
you won.
Then, no,
Congratulations.
they won, Jeffrey. I'm sorry.
No, I know that's.
Yeah.
Oh, I won.
Yeah, you did.
won.
You did.
Okay.
So thanks so much. You can
I think you
check
won
out
the
more
debate.
information on the web, and
I thought you said
I encourage you to learn
Finally
more.
won. I'm one
The
for one now.
51% attack. I don't know.
All right,
good.
thank you all so much.
Do you have any
Thank you.
Bitcoin?
Hey.
So we are going on a break. We'll be back in here at 4:20 to begin our general sessions again. So feel free to grab a quick drink and head back in here ready to start.